So in today's discussion, we will get a holistic view of the entire stage analysis, right? In the present market scenario, rather than entering into all random companies, it is more ideal to enter into businesses which are in a strong uptrend, right? So you need to have a complete 360-degree view. What is a stage in a particular company, and how do you analyze them, and how you will be taking your positions is what you should have a clear clarity, right? So let's discuss on this topic of stage analysis key learnings, right? Key learnings of stage analysis. So now I have bifurcated this into 7 parts, and we will also discuss about what are the things we need to delete, right? So first of all, whenever you are looking at entry into a stock, either on a short term or on the long term, right? Let's say, sir, I'm entering into a stock for short term, which means less than 1 year. I intend to enter for a few days, for a couple of weeks. You should have more up days than down days, and volume should be more on up days, right? So I just give you a pictorial example. Like, let's say this is your chart, and this zone is your volume, and this zone is your price pointers, right? So in order to pick companies, the right kind of a companies, whenever stock is moving like this, right? And yes, a stock may have few days of a fall, and a stock may again increase in its price, right? Again it can have a decline, right? We do not know. So now what is that we need to focus is those stocks or those setups where we see more up days than down days, right? So means more number of green bars should be there. Apart from that, on the price, more green bars, we should have good volumes coming up, right? So whenever you see a chart, right? Whenever you see a chart, any stock which we identify to invest, there should be more number of up days than down days. And on the up days, you need to have good volumes there, which means there is a lot of buying interest. Similarly, on a long term, right? Long term, I wanted to enter into few companies, sir. So the volume on up weeks should be more than volume on down weeks, which means even though on few days the stock is going down, volume wise it's doing wonderfully well, right? And good up move in volume trend. Sir, why is that we need to focus on the volume? When there is a good volume, which means institutions are entering, be it like domestic institutional investors or foreign institutional investors. When they enter, it will be more easier for the stock to up move, right? So that is why any stock, any price movement in a stock supported by a very good volume is favorable for us, right? Is favorable for us. Third, trend should always be in your direction, right? Trend is your friend. This is something where I use commonly in most of our sessions. Always ensure you be in those companies where the trend is an uptrend, because trend we should take it in our favor. And beware of companies which are serial gappers. So one day it is opening at a price and immediately touching the upper circuit. Again, it is touching the upper circuit, right? And for the last 4 days, there is a 5%, 10% upper circuit. You will be very, very happy, because your existing investment giving a gap up is good. You are making good money. But be very cautious. The reason being, any stock which had a continuous gap up, right? Opening at a higher price and just getting locked in a circuit, upper circuit or lower circuit related, right? Whenever you have this kind of a gap up, be prepared that it will have a gap down also, right? Whenever it is having a gap up, you should be very careful. And sir, the stock is under gap up. I am unable to exit. Yes, that will be the position, because here you will not have any buyers, right? In order to sell a particular company during a gap down, you would not wish to be there, right? You want to exit out. But if you want to sell, until and unless you find the counterparty buyers, you can't sell. So what you can do as a hack, if you have, let's say, 100 shares, right? Do not liquidate the entire shares at a one go. You liquidate 25 shares. Let's say the current market price is 100, right? Or even 1000. Let me take it as 1000, right? If the current market price is 1000, if you have 100 shares in that stock, first exit, right? First exit 25 shares at maybe 995 rupees, right? Again, another 25 shares whenever the price, if it is the current market price has come to 950, right? You exit at 940. Keep an order at 940, or the existing current market price. Instead of a market order, keep a current market price order. So that's how you exit, right? Exit in tranches, and every time you keep an order, if it is not getting executed, you cancel that order and again keep. So that is why the word used is beware. Serial gappers, be very, very careful. Until and unless you have a command on the market or on the trades you take, do not be overboard on gap ups or gap down stocks. If you're a beginner, it's okay to avoid those kind of a stocks. And do not fall in love with the stocks. Sir, I've been working in a company for almost 15-20 years. I know this company in and out. So I'll hold this company forever, even though that does not give returns, right? Any stock, any investment which is not giving you returns or which is not profitable, you should not love them, right? Because we are investors or we are traders, right? All the love towards the companies or the organization, you keep it personal. If you are working in a company, yes, you respect the company because that is what is giving you bread and butter. Coming to investments, if a stock is not moving, if it is like sideways, you have to move out. Or if it is declining, you have to move out. Companies like, be it like Kotak Mahindra Bank, Asian Paints, HDFC Bank, HUL, right? I can take n number of companies which are wonderful companies, but the problem is they are not moving anywhere. They are just in a sideways. Or even I can point out many companies which are declining heavily also, right? Which are losing out. So those businesses, I know if you are working them, if you have a very high respect or if you love that companies, as an investor or trader, I want you to get out of that emotional bonding. Be more objective. Whatever your system, whatever is your process telling you, do that, right? Do not fall in love with the stocks, rather date the stocks, right? And next, give respect to technical. Sir, what do you mean by that, right? So this understanding of stage analysis, right? So every company will be with either of this stage. Stage one, which is the early phase or pioneering phase. Stage two is an advancing phase, right? Or even a growth phase. More money is made during this stage, right? This is the stage we would love to be in. So in stage two, we increase our positions. Stage three is a consolidation phase or a sideways phase. The stock will not move anywhere. It just consolidates, right? Stage four is the declining stage or the falling stage or a bearish zone. That is where you come out of the stocks, right? Yeah. Sir, the stock is in stage four, right? You reduce your positions or you exit, right? You reduce your position, which means if the stage 4 is happening, if you have like 500 stocks, 25% of the stocks you will be reducing. Or even if you are still not comfortable, it's further declining, we come out of it completely, right? The golden mantra here is win big when your favorable, when your position is favorable, lose less when it is unfavorable for you, right? Which means if I just correlate with the above concept, right? So in an advancing phase, I increase my position and I win big, right? In a declining phase, right? In a declining phase, I reduce my position and I lose less, right? If you're able to adjust this, that will lead to success in investing. And this entire stage analysis, let me show you, you know, pictorial representation, right? Let me show you in a pictorial representation. So if you see my screen, so this discussion of a stage analysis, right? Yeah. So if you see my screen, every stock will have a different stage, right? Every stock will have this kind of a different stages it will run through, right? So if you see, this is the stock price movement, right? For few companies, it will be couple of weeks, and for few companies, it will be for a couple of years, right? So stage one is the pioneering earlier stage, or it forms a base, right? Stage two, we would love to be in. Stage three is the stage where it is in sideways, right? Stage four is the declining phase. And what did I tell you? Stage four is one we avoid, and stage two is one we add more and we make our positions big, right? We make our positions big. Okay. So this pictorial representation should give you, and you should always remember, in my winning positions, I will win big, and in my losing positions, I lose small, right? I lose small. So if this you are able to remember throughout, right, the chances of you having a profitable portfolio will be increasing. Because if you only target, sir, I want always the winning positions, no, there will be few companies, irrespective of the analysis what you have done, it may go into stage four. The rule is lose small, right? Lose small. And now this is where the price movement we have observed. Now, apart from the price movement, what I want you to understand is volatility index, right? Volatility index. So yes, apart from the stock stages, right? This VIX, like how you check your stock or a sector Nifty, Bank Nifty in trading view, just enter India VIX in trading view. If it is between 10 to 16, it is a low volatile zone, right? 16 to 20, medium volatile, right? For a conservative investor, right? It will be considered as a medium volatile. And when VIX is around 20 to 28, it is highly volatile, right? Highly volatile. And yes, right now in the present market scenario, the India VIX is around 15, 14.5. It's rotating between 14 to 16 levels, right? Which is little comfortable zone. It's not like too volatile, but yes, once it moves into 16 and above zone, right? 16 and above zone, we have to be a little bit cautious. That is where volatility will be there, right? 16 to 20. And for conservative investors, above 18, you should be more cautious. And anything beyond 20, we should reduce our positions. We should be in cash, right? We should be in cash, which means your short-term positions you can liquidate and just hold in cash, because cash is king, right? Cash is king. And this is something we be very cautious. India VIX for short-term investments, right? Sir, I've been holding few companies for a long term, right? For long term. So those companies, India VIX Depending upon the opportunities we have, we can further take. But any short-term investments, this India VIX, right? If you look at the screen in trading view, right now we are at 15.44, right? You look here, we are at 15.44. So this is comfortable levels. But once it is crossing 16 to 18, we'll be cautious. 18 to 20 for the conservative investors, will be a little bit careful. 20 and above, we should reduce our positions. We should not be overboarded on short term, be it on your intraday, be it on your swing trading, right? Be it on your short term investments, right? Because this signifies the volatility in the overall market. And lastly, apart from what you have to do, let's see what are some of the points you should delete. First thing, avoid FOMO, right? Avoid FOMO, fear of missing out. Sir, I missed entering into railway sectors. I've missed entering into pharma. I've missed entering into public sector unit banks, which have actually scaled up in a very high manner. And I see a lot of examples where I regret that I've not entered into those positions. So the thing you have to remember, or write it down in your notes, or write it down in a place where you can see everywhere, is stock market is a regret machine. You will always feel, yes, some of the important positions I have missed or I was not able to take entry. Stock market is a regret machine. That's fine, right? So do not have FOMO until and unless you are comfortable and you feel that's a good position that you are entering, then only you enter. Old system of thinking. Sir, I buy when the stock is going down. I average down, right? I try to catch a falling knife. The stock has moved 10%. I've added some 100 stocks. The stock has declined another 10%. I'm adding another 100 stocks, right? Never average down. Never catch a falling knife. You don't know how long it may fall and you will bleed, right? Rather average up. Be in positions which are stronger, right? Which are stronger. Third, I think the kind of negative people you have to avoid, which means whenever there's a small correction in the market, these platforms on Telegram, Twitter, right? Social media, Instagram, market is going to collapse. Recession is going to come, right? There'll be bloodbath everywhere. News channels, debates. You see a lot of negativity, right? You automatically enter into that zone and you'll have that pressure. Rather, that is the time where you need to chill out. Markets, ups and downs are a common part. Observe which company is exhibiting strength during a fall, right? Because the companies which are exhibiting strength are not falling to the tune of the market or are in sideways are the next multi-baggers, right? So rather analyze the companies during a fall or just relax. Do not be too worried on the portfolio, because by seeing a lot of things, or that's the best time to cut off all the negativity, right? Or that's not the place where you need to get distracted. Get rid of unwanted app, right? Stop all your notifications related, right? Right now we are living in a distracted world, right? So be more focused and declutter yourself, right? Right? Declutter yourself. Do not see like too many things. There are people, sir, I wanted to know about certain indicators. I type in YouTube. You type, you get hundreds of indicators, thousands of indicators, not required, right? Too much will be more complicated, and make a simple system, right? I always use a term, even in my book I have used it, KISS, right? Keep it super simple, right? Keep it super simple. You complicate it more, it will be more complicated to you, right? Declutter. And lastly, have a strong affirmation. I am a great investor, right? So during a market fall, correction will be there in all the portfolios, but few investors, I think I'm not a good investor. I'm not able to pick correct stocks, right? Or I'm not fit for investing. And that's the place they completely exit out of the market, right? So please understand, the extent of which your portfolio grows is to the extent of your self-image, right? The extent of your portfolio growth will be to the extent of your self-image So you always need to affirm yourself. You're a great investor. Keep learning. You keep learning. You keep updating your knowledge. You keep updating your strategies, your processes, right? And accordingly, your portfolio also will increase. But if you term yourself as I can't do it, or this is not for me, right? That will be the most difficult thing for an investor, right? So these pointers, what we discussed on the stage analysis, should help you in identifying those companies where we need to be in the trend, because trend is your friend. Either you choose an uptrend to have a very peaceful, comfortable, and a prosperous journey, or you choose a downtrend where you are looking at catching a falling knife, right? I would always encourage to look at adding stocks which is in an uptrend where the strength is there. You ride the strength, which means when there is a good strength, institutions are entering, right? Your FII, your DAI, when you wanted to take a journey into a company for a longer term, right? Be on the shoulders of a giant, right? You're sitting on the shoulders of a giant, which means you are being in the companies where the institutions are there. That's where big money is made, right? So the volume plays a very, very important role. Price and volume combination is very powerful. Okay. So let me know below what are all the pointers you follow from today, and how many of you will affirm yourself that I am a great investor. Type I am a great investor, or type it as great investor, right? I want every one of you to understand you are much beyond what you think. It's all about the inner game. And if you keep learning, and if you have an intention to grow just 1% every day, we need not have a 360-degree in your entire process or your learning. If you just aim for that 1% change, that will do magic.